day, everyone. You're welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the high inflation rate and its impact on the upcoming MPC meeting. Last week, the National Bureau of Statistics, (NBS), released December 2022 inflation report. The report showed the marginal decline in Nigeria's inflation. Headline inflation for December came in at 21.34% year-on-year from 21.47% in November 2022. This was the only moderation in inflation on record in 2022. The average inflation rate stood at 18.77% in 2022 versus 16.98% in 2022. On a month-on-month basis, however, there were sustained inflationary pressures as prices rose 1.71% in December from 1.39% in the previous month. As expected, food inflation, the major driver of inflation in Nigeria, was 23.75% for December 2022, significantly higher than the 17.37% recorded in December 2021. On a monthly basis, food prices rose at a faster pace at 1.89% from 1.4% in December 2022. We believe that festive activities drove up the demand for staples, which contributed significantly to the uptick in the general price level. In the same vein, core inflation worsened by 4.62 percentage points year-on-year, rising to 18.49% in December 2022 from 13.62% in December 2021. Increases in the prices of petroleum products and transportation remain the drivers of core inflation. The poor supply of petroleum products has caused unending queues at fuel stations and an unofficial hike in the price per litre of most petroleum products. The additional cost, alongside the upward review of the MYTO tariff, led the general price level to remain elevated. The key drivers of inflation through 2022 were predominantly from the supply side. Despite the expected high base effect, scarcity of FX for imports, currency fluctuations, attacks in the food-producing regions of Nigeria, and the unending war between Russia and Ukraine remain major threats to Nigeria's inflation. The epileptic supply of petroleum products, which caused persistent fuel queues in 2022, has stretched further into 2023. The scarcity came with its own unofficial hike in the prices across various stations, with prices reaching 185 naira per litre and above, a 9% markup from the official price of 169 naira per litre. Given the plans to abolish fuel subsidies, we expect the prices of petroleum products to remain high through 2023. Thus, consumers can anticipate high inflation going forward. Outlook ahead of MPC. The first Monetary Policy Committee meeting for 2023 will hold today. Given the moderation in the inflation rate in December 2022, we envisage the MPC may adopt a wait-and-see approach to observe if the downward trend in the inflation rate will persist. Ultimately, our sense is that the committee will seek to find a balance between supporting output growth and lowering inflationary pressures. Real returns. The gap between inflation and returns in the market has left investors with poor returns. Through 2022, real returns were firmly in the negative territory, as a similar trend is expected for most of 2023, given the huge budget deficit of over 11 trillion naira. Although we expect fixed income yields to remain elevated, we do not foresee a convergence strong enough to push real returns to the positive territory. Investors should tilt towards investing in commercial papers relative to treasury bills to earn better returns. Thank you for listening. Please join us same time next week for another exciting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 07082463747. Stay blessed.